Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, July 15th, 2011. This morning I'm talking about stressful situations. And one of the stressful situations going on in the financial markets today is that we're going to get the results of the European bank stress tests today. So the market's sort of been waiting for that to come out, and it's gone into a little bit of a risk-averse mode this morning, with commodities pulling back. European stocks are lower. U.S. stocks are just flat to slightly higher, and we have a gold which is selling off just a little bit, but we're near those all-time highs again in gold. And basically what they're going to do is they're going to look at all these different banks and see how that they would perform, see how they're capitalized, if there were any sort of sovereign defaults and things of that nature. So some banks are bound to be thrown under the bus today, which isn't going to be great for those individual players. But overall, this move is expected to inspire confidence in the market, so that everyone says, well, hey, wait a second, all right, even if these defaults do happen, then the banks are going to be all right. So we're going to have to wait and see what happens with that. That's going to be out at around 12 noon Eastern time, 5 p.m. London time, I believe. So that's what's going on over on the other side of the pond. Now, here in the U.S., if you watch TV, you'll know that anything that's going on out there is really regarding this debt ceiling debate. And, it just changes minute by minute, and depending upon who's talking about it, you just get the feeling that there's just the politics being played behind it is just so sleazy, all right, that, both sides are trying to hold each other ransom, so to speak, and, really get them to break their will on what they're willing to do. And at the end of the day, it really just comes down to, all right, we have to get this thing through, otherwise we're going to be looking at a potential default. Now, that's not to say that we will default, because we probably won't. All right, we do have enough cash that comes in that can pay for random things, but that's going to be a decision then that the Treasury Secretary has to make. So it really falls on his lap on who gets paid and who doesn't. So I don't think it's as dire as they make out on TV, but nevertheless, S&P came out and said that listen, if these guys can't get their act together, all right, we may have to do a downgrade, and so they essentially put the U.S. on negative credit watch. Now that's never a good sign when that happens, and it just really goes to show you how people are just kind of fed up with the politics about it. Now Moody's has already put on the U.S. on the downgrade watch, and credit default swaps for U.S. debt have started to pick up in price. So, there's some fears out there that the U.S. could default, and that's a little bit crazy. So, what we're looking at here is I've got Euro USD up, and you can see that we're playing around with the pivot line here. Okay, this is actually, if we go back and look at this on the daily chart, we can see that we're sitting right at the 38.2 Fibonacci retracement level from the previous moves higher for the 2011 highs of the euro. So this is going to be a sort of a pivot for a little while, and we'll probably trade on either side of that. But what we can look at is, let's take a look at dollar yen here. And when we look at dollar yen, all right, you can see that dollar's been weakening versus the Japanese yen, and this is really on the flight to safety play, and the idea that perhaps there's going to be some further quantitative easing happening. Now, Bernanke on Wednesday came out and said, hey, we're ready to stand by and support the markets. So everybody took that as a cue that, hey, we're going to see some QE3. But he then came out the next day, backed away from that statement, and said, hey, it's a possibility, just not right now. So they're probably going to give it at least a quarter to play out. But right now we're looking at some risk aversion in the markets, okay, as a result of what's going on around the globe. So, from actual data points, we have the European trade balance came in earlier this morning, came in better than expected. All right, there's a little bit of a deficit there, but not quite as big as they were expecting. But later this morning, we're going to get the CPI data here in the U.S., which is going to show us where we are in the inflation debate. All right, we're expecting prices ex food and energy to be up 1.6%. Okay, the headline number up to be up 3.6%. So we're starting to get near some higher inflation, and this has got to be concerning to central bank whose weak weak dollar policy is basically responsible for this. But it's only going to be a matter of time before the pain starts to be felt. And let's face it, if people start selling dollars because they fear QE3 is coming in, if we keep getting these weak data points, all right, we could get into a situation where dollar selling becomes rampant, the currency markets become a little bit crazy, and then all of a sudden, we'll see how that affects the prices of real goods. I mean, you talk about hyperinflation that happened, in say a place like the Weimar Republic in Germany. All right, well, what happens? Well, all of a sudden, if the dollar just goes into free fall, all right, now people are going to need more of them for different goods and services. That could jack prices up, and that could be hyperinflationary. I'm not suggesting that we have that situation yet, okay? But at some point, you can't just keep dumping dollars into the market and expecting that people are going to accept them as on a one-for-one basis. All right, and you can see that there's countries around the globe that are crying basically because of the weak dollar and what's been happening. So that's really what we've got going on. So a lot of stress in the markets these days, and when you get stress, you get volatility. We're also going to have the University of Michigan Consumer Confidence figure. That'll be out later this morning, which we'll see how stressed U.S. consumers are, and then of course the bank stress tests in Europe. So that's really what we're looking at today. I'm guessing that people are kind of probably want to be a little bit risk averse headed into the weekend and heading into this report. So we'll see what happens there. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.